Stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
Earnings have been quite a bit better than expected.
Quite a bit better than expected. Where's this guy getting that from? Isn't it amazing? They just won't tell the truth. Hi, I'm Phil Grandy, philsgang.com. What is it with these people? They just won't tell the truth, especially when they keep telling us over and over every day how the consumer is so strong.
In this particular cycle, that consumers are so strong and their leverage is so low that it is very possible that consumers are what bring us out of this recession very quickly.
I mean, this is amazing. It's just like Powell continues to say to us, well, we got to get back to 2%. Inflation 2%. First of all, whoever set that number up 2%, I'd like to meet that person. Why couldn't it be 3 or 4 or 1? 2%. Who set that number up? They just pulled that number from the air. But going back to this, earnings. Earnings are okay. Are you kidding me? Earnings are terrible. We're almost done with the earnings season for the first quarter. We're nearly finished. And it looks like they're going to be at minus 2.5%. It's going to be a 2.5% decline. Now, again, we're almost done. We don't have the number yet. But they're projecting 2.5% decline. And if that's the case, then think about that. It's going to be the second straight quarter a decline in earnings. So what's he talking about? Earnings have been better than expected? So that's better than expected? What are you, nuts? And then the consumer's so strong. Again.
In this particular cycle, that consumers are so strong and their leverage is so low that it is very possible that consumers are what bring us out of this recession very quickly.
They'll bring us out of the recession, all right. They're dying. Are you kidding me? The consumer is facing record high household debt. $17 trillion. Record low savings. You know savings have fallen 61% since, remember, if you go into the pandemic, savings was at 7%. And then it went up to 32%. Now it's down to 2.3%. It's about a 61% drop. What's he talking about? They're strong. They have record credit card debt, just under $1 trillion. Record mortgage debt, $12 trillion. Record auto debt, $1.4 trillion. Why would they have this debt? If they're in such good shape and have all this money, why would they have this debt? Credit cards are the real problem. They are still spending. People are still spending on their credit card. Credit card debt keeps going up. And people are getting deeper and deeper in debt. Mortgage applications are at 28-year low. Look at the housing. The household numbers came out the other day. They dropped like a flying crowbar. Terrible. Home sales are in the gutter. What's he talking about? Things are good. Delinquencies. The auto delinquencies are the highest since 2006. Credit card delinquencies since April are the highest since 2008. Apartment delinquencies in April are had a 38% surge in the last 6 months. This is crazy. So I don't know where he's getting his numbers. He's out of his mind. He's out of his mind. No recession, they're saying.
what we're seeing from Walmart and Target and other retailers is that the U.S. economy is not in a recession at all. In fact, it's actually growing.
It's growing. Are you kidding me? We just got our numbers. They estimated 2% growth. Instead, we only had a 1% growth. What's he looking at? And let's talk about Walmart for a moment. Walmart came out with great numbers. That tells you things are bad. Because Walmart, most of their business, about 60% of their revenue comes from, guess what? Food, groceries. And now, this isn't discretionary sales at Walmart. These are needs. People have to have this stuff. And also, it's not the person going into Walmart anymore that's making $35,000 a year, not even $65,000. They just did a study. They got more and more people going in that's making $100,000 a year or more because they have to. They're going to their grocery store. So when you hear Walmart, wow, Walmart's doing good, that means the economy's doing great. No, it means just the opposite. When you start seeing someone making $100,000 a year going to Walmart, that means the economy's tanking. Thank God, Walmart. But here's the same problem with that. Think about that. If Powell keeps going on this destructive raising of rates, he's got to stop. He's got to stop. It's not working anymore. He's missing the mark. He's killing us. He's lost the battle with inflation. He better admit it. All he's doing by raising rates further is destroying the working and middle class. He's destroying them. The people who, 75% of our workforce goes paycheck to paycheck. He's going to destroy them. Powell's making the same mistake over and over. Powell still believes, the stupid man, that the source of inflation is consumer spending. He's wrong. He's wrong. It's not consumer spending that the inflation comes from. So what he's doing, he keeps on raising rates, going to go to 2%, that magic number. He's doing that to force companies to cut your job. He believes if he gets your job cut, that you're going to stop spending and the economy's going to slowly get back to 2%. That's crazy. Profit price inflation is the underlying economic problem we're having, not consumer spending. All this is caused by corporations, and I said this last week. They keep raising their prices above their costs. They're increasing costs. As their cost keeps going up, like Coca-Cola, their costs kept going up, but their prices, they can keep raising their prices above their costs. And a lot of companies are doing that. The inflation's coming from corporations doing that. That pricing power. That's the problem, for God's sakes. Over the past year, the Fed has raised rates at the fastest pace since the 1980s. From near zero to 5.25. In June, it's going to go up again. Remember, they said in May, or April is going to be the last time they raise rates. April, right? Then May. No. We're going to go to 6 to 7% because it's not working what he's doing. So we went from 0 to 5.25. Okay, and that's the fastest pace since 1980. But consumer spending isn't slowing because they're still giving them credit. The banks are still expanding their credit cards, still sending them credit cards. There's the problem. They keep spending, even though they're paying 20% interest. I forgot what the number was last quarter. It was some crazy number, like $75 billion or something. That I mean, I'll get the number, but I was astonished to see how much they were spending on their credit cards. I mean, the expansion of their spending was outrageous because they pay interest only. Then they get another credit card, just like our government. They watch what the government, they're doing the same thing. We'll be right back after this break. What are they, all nuts?
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Phil Grandy has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grandy at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
You're not alone. 80% of those in the stock market, just like you, lose money. Hi, I'm Phil Grandy, philsgang.com. Why do they lose? Because they don't know how to short stocks in a down market. That will change once you use my patent Pro 2 color-coded chart. It works. The technology works. And it not only gives you an edge on the upside, but Pro 2 will put a smile on your face on the downside. That's right. Check it out. Free 10-day trial at philsgang.com.
When you listen to the advice of Phil Grandy at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard. Things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand. Especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Want good investing advice from someone you can trust? Listen to Phil Grandy.
With what's going on today in the economy, especially the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market, or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grandy at philsgang.com. When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grandy at philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Join my gang free for 10 days. Look, you got to learn how to sell short. In the 10 days that you have free, you don't want to stay with us, that's fine after 10 days. But during that 10 days, you will know how to short. That's the only way you're going to survive this. Now, everybody's looking at the rally we're in, this May rally, this May feel-good rally. What are they, nuts? It's not going to last. Here, let me show you something. For those people who are on YouTube, Facebook, and Rumble and watching me right now, I want to show you this chart. Now, those who aren't following me, you can get this tonight at my show's archive, okay? But this is important to take a look at. I mean, let's put things in perspective here. If you look at the March rally, and we're calling it the March feel-good rally, okay, the feel-good rally. And look at this rally. It went up about 13%. And you can get that, and so started in March, went up 13%. But look at the volume. Look at the volume here, okay? See that volume? That's big volume. Now look what happened. We stopped. We went sideways for a while. Now, this is the Qs. I'm talking about the Qs. It's leading the market. It's always the Qs, the big tech stocks. Everybody's buying 3 stocks that are driving, actually 4 stocks now, NVIDIA, which is a semiconductor. But everybody's buying Meta, Apple, Microsoft. Those 3 are holding up the whole market, and that's pushing up the Qs. And then, of course, besides that, you have Google and Amazon bringing up the rear. But it's those 3, they're driving this whole rally. So about 12, 13%. But look at this now. Look at the May rally. What's the difference? Look at the volume. Look at the volume. It's nearly half the volume. The May rally is nearly half the volume. Why? Because you don't have the institutions. They're not buying. They're not in here. So what's going on? Well, since the end of March, these tech companies, as I say, they've been rallying, and I think they started. March 13th to March 31st went up 13%, and now April we started that next rally, what we call the May rally. From April 25th to where we are today is up 12%, but volume is way off. So there's only 2 reasons. There's only 2 reasons for the rally. Happy talk and artificial intelligence. Now, a happy talk is they're going to make a deal on the debt ceiling. They're going to make a deal on the debt ceiling. And the market's going to rally big. I better get in. So everybody's speculating that they're going to make a deal, which they always do, and the market's going to have this big rally. So you got people going in, we call them tourist investors. They have no idea what they're doing. Okay, tourist investors. In fact, these tourist investors are so bad now. These tourist investors are now sitting in Microsoft, Apple, and Meta, and they use them as a safety net. They have now gotten out of their safety net of stocks, their defensive stocks like Clorox and Kellogg's and all that. They've now moved into Meta, Apple, Microsoft, thinking they'll never come down again. These tourists, they're called tourists. And so what they're doing as this rally occurred, they're saying, well, a happy talk, I want to keep buying because I don't want to miss the rally. And the second group is saying, well, I want to keep buying because artificial intelligence, they're so optimistic about it that they think Meta and Apple and Microsoft is going to be getting, purchasing all kinds of AI, and they will, along with Google and Amazon. But there's a problem with that. Big tech stocks are growth stocks. Big tech stocks need cash. They burn cash like no one else. Big tech stock. They burn cash, these companies. And they have to continually be out there borrowing. Well, when interest rates were at zero, that was fine. And they also did a tremendous amount of stock buybacks because they could borrow money at zero interest rates. That was fine. They could meet their cash burn. But understand what's going on. That's zero rates. Our rates are going from 0 to 5.25. In June, we're going to go to 5.5. It's killing these companies. When interest rates go up, banks do well, not tech. And everybody says, yeah, but tech's going up when yields going up. Interest rates are going up, tech's going up. But don't you understand? Okay, they're financially engineering this to go up because they know they got the happy talk driving it, and then they got all this. Every day they're talking now on all these financial shows. Artificial intelligence, Meta and Apple and Microsoft and Nvidia. They're all gonna benefit, and they're gonna be buying all kinds of AI. But they don't understand. When they borrow money, it's not zero, it's 5.25. And when you look at the volume of the first part of the rally in March, and then look at the volume in the second rally we've had here in May, that tells you alone it's not going to last. And tech stocks never rally on high yields. Go take a look at the yields. They're going straight up. So this cash burn, these tourist investors don't get it. They don't understand. They have no idea. So with this kind of cash burn, remember, these big tech companies, when you buy a tech company stock, you're looking out in the future, earnings going forward. Well, there's very little institutional buying. That's the problem. That's why you can't sustain this tech rally that they were able to accomplish through happy talk and all this AI talk. It's not going to work. It's not going to work. And people don't realize that. These investors don't realize that. And they're going to get hit hard. You know what's amazing, to me anyways, is what people don't understand the difference between 2006 and 2023. If anyone asks, what is the market going to do? Your answer is between 2006, 2023, and I'll tell you about that after the break.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's Gang.
When I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
Hi, I'm Phil Grandy, philsgang.com. Are you tired of being lied to about some magical economic recovery that only benefits the 1 percentile? And then when the market does collapse, you're sitting there calling your broker, what do I do? When you should be shorting? Learn how to short the market. Continue to listen to my radio show, philsgang.com. Become a member, only $39.95 a month, and learn how to short.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grandy at philsgang.com. You know, I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works. Hi, I'm Phil Grandy at philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com.
What, are you nuts? Coffee's up 92%. Lumber's up 67%. Heating oil, what, 60%? Gasoline, 55%. I understand why you guys are telling me to raise my rates here at Phil's Gang, but we haven't raised our rates since 2001. Hi, I'm Phil Grandy at philsgang.com. I'm not going to raise my rates. Our membership's been $39.95 since 2001, and for a good reason. So that you have enough room that when you do make money here at Phil's Gang, and you will, because you're going to learn how to short stocks, that there's enough room to send some money to St. Jude. That's why we never raised our price. And that's why we give you good value. So, you want to continue with good value, good information, be on the right side of the market? Join my gang, philsgang.com, where the price has not moved, where we fight inflation. philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. Join my gang. Go to my website, philsgang.com. Click where it says Get Started. And right next to that, by the way, you can click where it says how Pro 2 works. My color-coded chart works beautifully, tells you when to buy, when to sell. It works. And you can get that for 10 days free. Listen to this.
Discretionary retail is already in a recession, Carl. We've seen that consistently in the reports that materialized this week, and it's likely to get worse before it gets better.
Boy, at least we got some honesty there. See, the reason, as I said earlier, you're now getting groups who are making $100,000 or more going to Walmart and Target for the food. And you see Home Depot, it got slaughtered. The worst numbers in 20 years. And this guy here comes out and tells you what?
In this particular cycle, that consumers are so strong.
So if the consumers are so strong, then who's not going to Home Depot? If they're that strong, why would Home Depot, aren't they consumers? The people who work paycheck to paycheck, aren't they consumers? They're your biggest consumers. The rich aren't big consumers. The rich hardly spend. When the rich get money, they got everything they need. They take their money and put it in a pile with the rest of their money. It's the people who make between that 65,000 and 100,000, that's what keeps this economy rolling. And the real thing that keeps this economy rolling, small businesses. And by Powell raising these interest rates, he's killing small businesses. Tightening interest rates is not working. If he tightened interest rates from 0 to 15, we'd have all this behind us. But oh no, Biden didn't want a recession. No, he didn't want a recession. He just took office, man. He's the man, you know. He's the man. He didn't want a recession. Now we're suffering. Not only a recession, he put us into a worse recession. What's he do? He goes in and he turns around and destroys our drilling, our oil, our energy. That's when things went crazy. That's inflation. My Lord. And you also have, again, the pricing power of these corporations. What they should do, if I were in charge, I'd go and meet with the corporations like Coca-Cola and all these companies making a fortune. Coca-Cola made last year was something like I forgot what it was. $9 billion. Thank you. $9 billion. So let me ask you a question. If Coke made $9 billion and they're bragging about their pricing power, it means every time, inflation's for everybody. Coke doesn't get away from inflation. Their costs go up. But they got pricing power. If their costs go up 10%, they can raise their prices 13%. That's pricing power. That's where the pure inflation comes from, right there. That's the real inflation. That's where it comes from. And then the other big inflation is we keep printing money. We keep printing money because we have to pay our debt. We have to pay our debt. All we do is print. That's all inflation. So we got a real problem. The inflation fighting's not working. Now, I'm going to tell you, if you put everything in perspective, and before I do that, let me play this cut here.
We do think that this tech trade could persist. It probably does have some legs.
She's trying to tell us this tech trade. Remember, we had two trades. We had that the March rally, and now we got the May rally. How can she say that our rally has legs? Because the big institution buyers aren't buying tech stocks. What is she talking about? And remember what I told you, before every crash, I always say they always do a rally, right? Mark this date down, March 13th, 2023. Remember what I've told you many times. Before you get the final crash, you always have that one final rally. So all the big institutions get their big players out, the big institutions out, like the fire, the police, and so forth. And then they'll pull their bids out and it crashes. We're starting earnings season in April, just a couple weeks away. They're going to take that earnings season and they're going to rally the hell out of this market. And like all of the times, it will fail, and that'll be the beginning of the crash. Mark this down. That's right. I said that right before the earnings season started in April. I said that in March. And remember what happened in March. Towards the end of March, I forget what date it was, but towards the end of March 13th, I think it was, that's when they started this fake rally. They started to push this rally because they knew the earnings season's coming up, and you always can push the stock market up in earnings season. There's all kinds of ways to cheat, right, with earnings. Everybody beat their estimates by 1 penny. 94% of the companies that reported so far have beat estimates. Wow, gee, 94% of everybody, 94% reported, and they all beat estimates.
Wow.
Oh, wow.
Yeah, wow. That's almost impossible. How they do that? Because they're beating their own estimates. They put their own estimates in. Oh my God, this kills me. So, let's put everything in perspective, shall we? If you don't think there's going to be a crash, there always before a crash, you always have a big rally. That's what's going on right now. Okay? That's what's going on now. But I want to put this really in perspective. Think about this. Our national debt, okay, is up 181% from 2006. Deficits are up 42 trillion. Are you kidding me? Our home sales for April are down 23% year over year. Credit card debt year over year is up 18%, and they're paying 20% interest rates. And what's this guy saying? Consumers are so strong? Really? Now, our manufacturing is dead, gone, dead. April, the Empire Manufacturing, biggest 1 month order drop in 20 years. Philly Fed, Dallas Fed, March, all these dead, 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 dead. Now, let's talk about the rates. 2006, what was the Fed rate? Does anybody remember? 5.25%. What's it today? 2022, 23, 5.25. Now, I'm going to tell you exactly why this rally is not sustainable. Answer this. Our debt was in 2006 $10 trillion, and we're paying 5.25% interest. Remember, they raised rates to 5.25 when our debt was at 10 trillion. Household debt was at 11 trillion. And what happened in 2008? Because they raised those rates to 5.25, we had the big crash in 2008 because of the 5.25 they're paying on our $10 trillion U.S. debt and 11 trillion on our household debt. Now let's think now where we are. Same rate, 5.25. Can you imagine that? What a coincidence. But our debt is not 10 trillion, it's 31 trillion. So since 2006, our debt has gone up 181%. Our household debt since 2006 has gone up 54%. It went from 11 trillion to 17 trillion. So get this in your head. In 2006, when they raised rates from 0 to 5.25, and when they had 10 trillion in debt, 11 trillion household debt, the market crashed. We have 31 trillion and 17 trillion. We're not going to crash? Why would we be so lucky? I get back. Join my gang. Learn how to sell short.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grandy and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
Why are investors listening to Phil Grandy of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grandy at philsgang.com. When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grandy of philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Sign up for a 10-day free trial to see our platform in action. Learn more at philsgang.com. That's philsgang.com. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Why are investors listening to Phil Grandy of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, it's like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grandy at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Hey, good afternoon, gang. It's Steve Celeste here with philsgang.com. Just wanted to tell you how to get engaged with Phil's Gang and how to become part of the Phil's Gang membership or how to try us for 10 days free. Simply go to philsgang.com. That's www.philsgang.com and click on Get Started at the top of the website. Click on the big red banner that says Working Investor 10-day free trial, and that's all you got to do. And hey, while you're at the website, why not stop by our gift shop, see if there's something in there for you or for somebody you know. All right, thanks, and back to you, Phil.
Thank you, Steve. Listen, to please try it for 10 days. Go to our website, philsgang.com, click where it says Get Started. You'll be working with Steve, myself, and Willie. And for 10 days, those 10 days, you're going to learn how to sell short. You're going to learn how to read the yields. That's very important. People don't understand. You never buy a stock unless you know what the yields are doing. Because the yields, if they're going up, there's certain groups of stocks you can get in. If yields are going down, there's certain stocks you get in. Many people are getting in stocks. If they understood the yield, they would have never got in that stock. So example, I mean, if yields are going down and all of a sudden your broker tells you, or Kramer to buy all these bank stocks, right? Yields are going down, you're going to get slaughtered. And you know, that's happening right now. They're artificially pushing up the tech stocks when interest rates are going up. Yields are going up. It's not sustainable, but you can't tell people that. They're not going to believe me. When you see the tech stocks going up, they're going up for the wrong reason, and you're going to pay for that. And then what you got to look at is look at the volume. Look at the volume. You have to compare the rallies. When you look at the rally that we had back in March compared to the rally we now have in May, it's about, we have half the volume. Half the volume. But the one thing that really, okay, listen to this. This is what I wanted to get. Listen to this stupidity.
The low-end consumer looks like real reasons it's going to be more robust for longer and maybe not a typical recession where unemployment rockets up. So I think there's some real reasons the market's done better.
Isn't that stupid? The low-end consumer is saving us. The low-end consumer is saving us. Think about that for a moment. How the hell is he doing it, the low-end consumer? I don't get it. He's got record household debt. His savings at 61% low. He has no savings. He has record credit card debt. He's choking on his credit card, and then he hopes to get another credit card to pay the interest on that credit card, and that's what they're doing. You got the record home equity withdrawals, record 401k withdrawals, record savings withdrawals. Mortgage applications are at a 28-year low. How come they're not helping us with that? Are you kidding me? Lenders, their profits are dropping 98%. This is crazy. So how are they helping us? I don't get that. So if you can just leave tonight, and I want you to think over the weekend for a moment, how they're jamming you up. Everybody's jumping in this tech rally, thinking that Meta and Apple will never come down again. Meta, Apple, Microsoft, Google, Amazon, even my favorite, we're up big time in NVIDIA, about 90%. We've been at since January. 60%. And not just we short stocks, we go long. We bought CMA. That's up, 12%? Apple's up 13%. NVIDIA's up 60%. We shorted Nike. We got a nice 7% in that. We shorted gold, AU, about 8%. But none of that means anything. What you got to understand is if in 2006, common sense tells you if our debt in 2006 was 10 trillion, our national debt, and household debt was 11 trillion, and when they raised rates to 5.25, it was too much for the 10 trillion and the 11 trillion in debt, and that's why we had a crash in 2008. So what are we going to do now? We still are at the same rate, 5.25. So if 10 trillion was too much debt in 2006, what is 31 trillion? 181% increase in debt. Better? Household debt couldn't handle, the 11 trillion couldn't handle 5.25% interest. That's why we crashed. Now, household debt's not 11 trillion. It's up 54% at 17 trillion. So only common sense tells you, as I said to you back early on around March, I said to you, this is the last rally they always have before a crash. Now, does it mean they can't keep propping this market up? Sure. Look what they did last night. The market was going into the closing. The Dow was going into closing. It was down 200 points, right? And so what does the plunger team do? The plunger team, they came in just right before the close. The Dow was going to close down 200 some odd points. They went out, they bought index futures, and all of a sudden the market closed. Right as we go to the close, we're up 150 points. So we went from a negative 250 to a plus 150 right before the market closed because the plunger team manipulates the market, and they went out and they bought some index futures to push the market up. You don't think they're pushing up the tech market to Qs when yields are going up? That's the worst thing you can have is buying tech stocks when yields are going up. Now, we're making profit in our Qs. We're always in the Qs, long or short. I told my gang members yesterday, start taking profits. And let's see what happens by Tuesday or Wednesday. If there's enough volume to sustain the Qs. I don't think there is. So we'll be ready to short it. But just, think of our debt. And the other thing that nobody thinks about is that, and what a mess we got in. This president, since he got in office, he dismantled our energy supply. He doesn't protect our border. This kills us economically. He's divided the nation in half with all this race nonsense. He's injecting all this anti-American propaganda in our schools, in our school curriculums, to nurture, to bring in, pro-socialism, anti-patriotism. So he takes our curriculum, and he's trying to get the kids to be anti-patriotism and more pro-socialist, Marxist. He devalued the dollar. He inverted the yield curve. He gave us historic debt and deficits with all the spend. Gave us record household debt, record commercial debt, record corporate debt. Spending going wild. Think about what he spent on. Are you kidding me? Infrastructure bill. Then he went into the Inflation Reduction Act. Then he spent more on the American Rescue Plan. Then he's got then Ukraine, $75 billion. The new Green Deal spent another $50 billion. We don't have any of this money. We got to hope that China will keep lending to us. We got to hope that when you go to Walmart and you spend for groceries and clothing, and Walmart goes over to China and they want to buy more inexpensive clothes to bring back to the folks who are working paycheck to paycheck so they at least have a good standard of living. We got to hope that Biden hasn't damaged the dollar so much that China says to Walmart, no, we're not going to sell you any more cheap clothes. They're not going to anymore. And that could happen. So please learn how to sell short the market. That's what's going to save you. Not hiding in Clorox or Coca-Cola or Meta. That's ridiculous. And you'll have fun doing it. PhilsGang.com. Check it out. Go to our website, PhilsGang.com. Click where it says Get Started. And also check out our Code 2 color code.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.